Good afternoon, everybody. Today I chatted with Anthony Milewski. Anthony tells us what commodities he likes as the world transitions to electric vehicles. We get into electric vehicle battery chemistry. We discuss carbon credits. Anthony gives us his true thoughts on the Russia-Ukraine crisis. And Anthony is also the chairman of Nickel 28. We had to ask him what's happening to the nickel market after the fireworks that happened over at the London Metals Exchange. All right, everybody, enjoy the interview. Anthony, thanks so much for joining us today.
Yeah, thanks a lot, man. I'm always happy to come on the show. Love talking with you guys.
Okay, so since the last time we spoke, the macro backdrop of the world has changed tremendously. We got Russia, Ukraine, China, and Taiwan. We got a really strong US dollar coupled with high inflation. And in the backdrop, we've got this electric vehicle transition that seemingly is hitting an inflection point, which is obviously shaking up the commodity world, something that we'd love to get your insights on. I'm just curious here, and I'm going to make this somewhat open-ended because I don't know exactly sort of where your thoughts are. What is your take on what's happening right now in terms of the macroeconomic background of the world?
Yeah, I mean, it's it's always the unique time. I mean, every time we speak, something interesting is going on. In particular, the situation in Russia is very problematic because of the hydrocarbons that we get out of the former Soviet Union and Russia in particular. And, I think that we shouldn't underestimate that Putin didn't actually, really strategically plan around launching his invasion of Ukraine when he did, realizing that once the energy transition is complete in the West in the next decade, the amount of influence and power that he'll have is, massively decreased, right? So I think that it was probably pretty strategic. And then you have some other kind of interesting things going on with this transition away from coal that had been underway now for 5 years and not really achieving an alternative. Once again, kind of part of, I think, probably Putin's plan. And so there was a weakness in this transition in that we hadn't really solidified that next source of energy like uranium and other kind of battery technologies to better harness solar. And I think it's been taken advantage of it with Russia. And also, by the way, I think a corollary to that is you now have China watching how it's played out in Ukraine and thinking about what its next moves are. And so that has all really kind of turned markets on their head when you've had COVID, where the entire world shut down for 2 years and a huge amount of printing happens. It's this very unique time, and it's a complicated time, I think.
Yeah, that's an interesting take. I haven't actually heard that one, that Putin is a little bit nervous about what's happening sort of with fossil fuels and Russia's
They have nothing.
position.
They have oil. I mean, these guys, I mean, they should have everything. I mean, they have a lot of scientists. And, one thing it's pretty tragic about Russia is that if you look at the end of the Soviet Union, I mean, they had amazing institutions, they had amazing scientists, and they ended up driving cabs and they left. And that is quite in contrast to China, where China's done a fantastic job of harnessing that human capital. And I think now it's pushed Russia into a pretty desperate position where, they really only have hydrocarbons left. And I'll give you a really great example. So in the early days of that Ukrainian invasion, you had all these armored vehicles basically stuck on roads. And the reason they were stuck, among other reasons, was simply that their tires were going flat. And what apparently had happened was when they ordered tires, they were meant to order, tire 1A, but that tire was kind of 10x the cheap tire. And so they budgeted for the expensive tire. They bought the cheap tire and grafted out, all that money in between. So someone stole money. And I think that rot and decay combined with an energy transition in the West, it's probably really scary for Russia, because if they wake up in a decade and they have a corrupt state and, the price of oil is collapsed or demand is collapsed, then that's a really big problem. Because, by the way, after oil, what do they sell? Coal. So I think that there's an element there of strategic planning on their part and thinking about what the world is going to look like over the next 10 or 20 years.
You think that Europe can really sort of break away from Russian natural gas?
Look, this is a question around uranium. And probably why the uranium stocks have really held in there better than almost any other commodity stock over the last kind of 4 or 5 months. There's got to be that conversation. And I think for it to happen, the only technology available is nuclear. And nuclear is really clean most of the time. It's just that when it's not clean, it's highly inflammatory and its long lasting effects. But I think France has done a great job showing what can be done with nuclear. And so if in fact they're going to break away, they're going to have to kind of go to other sources of energy, and it's not burning wood in Germany, right? Which is what they're doing, but it's going to have to be having a base load that's heavily reliant on nuclear, in my opinion.
Okay, so you just launched the Oregon Group, which is sort of an investment research team led by you and your partner Justin, who's also involved with Carbon Streaming Corp and Nickel 28. We'll get into them later. You wrote a piece on it that I read this morning that I thought was interesting on hydrogen. We always hear little things about hydrogen here and there, but if you're an investor sort of looking at playing the space, what do you think are the things that you ought to be thinking about in terms of how to actually play it?
So I think it's still really relatively early, and I don't think hydrogen lends itself to small caps. Okay. This is big capex, it's big technology, big G&A, big R&D, and so I think you're going to be looking at larger cap names. And so I actually anticipate in the coming 5 years, and I get put 5 years out there because I think we don't know where the macro is going over the next 2 years here, or a year with a recession. But I think that there will be a bull market, and you're going to have people on here telling you all about their penny stock hydrogen play. And you're going to buy them and sell them, and maybe we'll make some money, maybe we won't, just trading it. But I actually think that the hydrogen developments will probably largely be best expressed inside of larger cap names, because it's just such a capital intensive business.
Mm-hmm. I think what's the big oil company here in Canada? They've got a huge investment in hydrogen, so that makes sense.
In fact, actually, I think oil companies are the natural. Like, if you think about the structure of those companies and the size of their balance sheets, and this is like a 50-year play. It's not even relevant, but I could envision that oil companies become hydrogen. Like that could be the natural transition, is that oil companies take over that space. Now, there's probably going to be innovation and some interesting companies, but I'm not really, I've seen, I'm sure just like you, 10 pitch decks. None of them really make any sense to me because of the capital intensity and also the binary outcome. I mean, one of the things about some of this technology is it's either X or O, and 1 or 2. And so either it works or it doesn't, and you spend $2 billion. And that's, I don't think that works as well for non-tech stocks in the capital markets and the public markets.
Yeah. Is there like demand right now for hydrogen? Like, let's just say that we saw a pitch deck of a company that is going to put in a bunch of infrastructure to create hydrogen through electrolysis. Would they even have a market to sell it to?
So, I think the most interesting use of hydrogen in the immediate future is going to be shipping. People don't realize how dirty shipping is. I mean, it is just awful. It's dumping, pollution into the ocean. And actually, the ocean is probably one of the most critical physical features on Earth in terms of regulating temperature, our food, by the way, all these different things. And so it's important that we get on top of the pollution that's happening there. And, I've talked to a number of large shipping companies, and I think that early adoption in mass might actually come in shipping. Because if you think about shipping, you're not really going to use nuclear, or I know there's nuclear powered submarines, but that seems really not seems unlikely. And then you kind of say, well, our battery is going to work electric. Yeah, that might work for your wakeboarding boat. But if you kind of look at the technologies and people trying to transition, I think the shipping industry is the natural, and you're on water. If there's any, it's to me, it's kind of a natural industry to be a leader. And I've spoken with CEOs of big shipping companies who are really focused on it.
Yeah. So there's three types of hydrogen, right? There's there's green, there's blue, and there's gray. Green just comes from renewable sources. Gray is, I'm just remembering back to your article. Gray is the bad kind. It puts carbon into the atmosphere, and blue is where you might use natural gas to create hydrogen but you're going to capture that carbon on the way out. Do you think that blue hydrogen is sort of going to be our sort of ticket into hydrogen over the sort of, let's say, medium term?
Yeah, I think so. But unlike say electric vehicles, where that lithium ion technology is really kind of set now for the next 10 years. There can be shifts in chemistry. I don't feel as strongly. I think with hydrogen, it's still working its way out. So we're still on the front end of really figuring out which technologies. I would agree with your observation, but I think we're still really pretty early in figuring it out. And probably the decider, and come back to VHS and Betamax, right? Actually, Betamax was a better technology at the time, but VHS won in large part, people don't realize, because the pornography industry adopted it. And that was one of the key reasons. Yeah, people don't realize that was actually one of the reasons why it took off. But the point is, it was adopted by an industry and then widely disseminated. And I think in the same way with hydrogen, if what the shipping industry ultimately adopts and disseminates, probably will get all the R&D and then take a step forward, even if right now there are 4 competing things, all of which could be equally as interesting, right?
Sort of talking about those technologies that ultimately get chosen. Let's talk about car batteries. I know you've been involved with cobalt. You're certainly involved with nickel now, which nickel 28 has some exposure to cobalt, as I understand it. Where do you see battery chemistry heading with electric vehicles over, like, say, the medium or long term? Do you think that we're going to see cobalt continue to be a big part of batteries?
Yeah, so it's a great question. And one of the things that's really a conversation too around, like, how do we use cars, right? And so what I envision, and I think a lot of people envision, is mobility as a service. And what that means is, if you live in a highly urbanized area, you're not gonna probably own a car. You're gonna be part of some sort of a service where a car comes and picks you up and is waiting for you. And so I think that's where we're going. And I'll tell you why that's relevant. Right now, everyone has been hyper focused on they've been hyper focused on the distance that a battery will go. So, we have to keep pushing the limits, and this Tesla needs to go 500, 600, 700, whatever the number is in terms of miles. But it's actually a little bit of a misnomer, because how many miles do you drive in a day? 40, 30? You don't drive that many miles in actual fact. And when we kind of start to consider that, the LFP chemistry, the lithium iron phosphate chemistry, which is being used pretty heavily in China, it works great. You get half the range of the lithium ion battery. You get half the range of that NMC battery or NCA battery. But guess what? Like, most people don't need 500 miles. And so I think what has happened is, in the early days of this electric vehicle move over the last 3 years, everyone focused on range, not really thinking about practically what that means. And so I don't see cobalt leaving the batteries, because I don't see that extreme pressure coming on to cobalt, because what I see is a variety of chemistries for a variety of uses. And by the way, the LFP chemistry is much cheaper. So maybe your Honda minivan, your Odyssey, that you take the kids around town on, it just doesn't need, just conjecture, but it doesn't need 500-mile range. 200 miles is plenty fine. And by the way, it's a lot cheaper. And that's the family car for the day. And then, you've got your other car, whatever that might be, that has the 400 or 500, 600-mile battery range. And so I think we're seeing that play out in China, who really is the global leader in what they're doing. And people inside of urban areas are buying a cheaper, shorter battery, because they just simply don't need that long duration battery. So, the long way to say it is, I think that all those models around demand are true, but as with all these things, what plays out is much more nuanced in terms of actual use cases. And, I will tell you, in my view, the demand for electric vehicles in terms of basic materials that go into the batteries, it's only a fraction of the demand that we're going to need for battery storage. So I'm talking to you today from a cabin that I have in Washington. We have a solar roof hooked to a Tesla Powerwall. Well, I am, for most of the year, completely self-sufficient from the grid, and in fact, I get a check from the public utility because I'm able to store power during the day and then send it off in the night. So the upshot of it is, I think that the demand for storage, battery storage, is going to far exceed electric vehicles over the next decade or 15 years. And that will take a little longer to roll out because, there's things to be worked out. But I think that's actually going to have a really big impact on this market.
So tell me about your experience with the Tesla Powerwall then. I haven't had a chance to talk to many people who actually have one installed. How challenging was it to get it installed? How reliable is it? What's your general experience been with?
Yes, I don't have the solar roof. They don't install it in my area. So the roof is an actual roof. Although I do have in-laws that have it down in California.
Okay.
The Powerwall is great. I mean, I did it as part of also putting in a huge solar array. So I contacted a provider who installs solar panels. They actually offered a couple different systems. They offered Tesla, but they also offered some other systems because any battery pack can fit with your solar panels. And they come and they set it all up for you. And frankly, it's super easy. I mean, they pull the permit with your local utility. And I think the only thing I have to do is because it's a rural area, I don't have smart metering. So I have to take a picture of the meter once every 30 days to kind of settle, as it were, with the utility. And it shows how much I generated, how much I utilized, and then a net number. And then I either owe them money or they owe me money based on that net metering. But the wall itself really just kind of runs itself. It fills it up. And then once it fills it up, if you're not drawing it down, then it sends money into the grid. But it tries to time your use with the peak solar time such that it's most efficient in you drawing out power, recharging the battery, and sending it to the grid. So I found it to be great. I'm in the right spot. It's not, it's very sunny, and it's an ideal location.
Do you think home energy storage is going to be a big part of the future of energy?
I think it's going to be really critical because, and by the way, it's not going to be just. Sorry, the kids are rolling in here, guys. I've got kids. So it's going to be important, but there's going to be several different technologies. So there's something called a lead acid battery, and if you look at like a new subdivision in Arizona, what's going to happen is they're all going to have a version of a Tesla solar roof, whatever that becomes. And then you're going to have a massive lead acid battery or one of like 3 or 4 other types of batteries. Vanadium redox would be another battery. And that entire neighborhood will flow into that single battery, and then it will flow back out. And so it will act as a single utility. So, if you look in Africa, they're already using these different techniques in more remote places. And in fact, Africa is an interesting case study because if you recall, there are no power lines in a lot of places in Africa. They skipped a generation of technology and went straight to
microgrids,
cell phones. Yeah, they went straight to cell phones. So I think in the same way, they're going to go straight to microgrids. And I think that this is also going to present a bull market for a variety of metals. Like lead is one. Lead acid batteries are massive. They don't work in cars. They're heavy. They're beautiful because they're so recyclable at your house. Another one, of course, vanadium redox. These batteries are, once again, fantastic. They're big. They belong at a minimum at a house, but maybe on a more of a neighborhood scale. In my case, lithium ion made the most sense because I didn't need a big battery. But I think one of the things over this kind of energy transition that we've focused on has really been nickel, lithium, cobalt, probably copper. But there's going to be this whole echo boom of really critical metals that really just haven't gotten that hype yet. I mean, lead, strangely, is going to be one. Vanadium, certain types of vanadium, mind you. There's steel vanadium, there's vanadium for batteries, just like all these things. There's another, and hydrogen. So I think stay tuned, but over the next 5 or 6 years, we're going to all learn about a bunch of these kind of semi-esoteric or metals that we haven't thought about that are really going to be part of this. And I think this is all going to accelerate. Now, we might have a recession and it might not accelerate for 18 months, but mind you, every government in the world now is like, we can't trust Russia. Like, this doesn't work anymore. And so there's going to be huge incentives, and it's going to accelerate this transition. And look, nothing has really slowed about electric vehicles, but I think this conversation, if we have it in a couple of years, is really going to be about battery storage as it pertains to capturing solar and really moving that transition, because the best source of energy we have is the sun. And, I wouldn't say peak because that's not true, but solar panels have gotten much, much better. And they're kind of now at a state where you almost need a new technology to drive them forward. So if you're a homeowner, it makes sense to buy them. It's not really going to change that much. So this is exciting, and I think something to watch over the coming years.
Mm-hmm. Okay, so let's switch gears here. Let's talk about carbon streaming. This is a very unique deal that was brought to the Canadian public markets about a year ago, I believe. You guys just put out a corporate update outlining the various projects that you sort of invested in. Out of all the projects that you have with carbon streaming, which are the ones that you're the most excited about?
So I'm just an investor there. I mean, Justin Cochran runs it with his team. But for me, as a big shareholder, I really like Rimba. I think that's exciting. I mean, that's the gold standard of these credits. Although I do, I was talking to Justin recently, and I really like what they're doing in Mexico with the mangroves. I think that's interesting. But, I'm just excited about anytime you can take capital and restore an ecosystem, preserve forest, come back in and make a change and generate these credits and make money for investors and kind of save the environment at the same time. I mean, this to me is just exciting, and those guys are doing a great job. The share price has been crushed. I mean, mind you, but
I saw there was a letter writer who put a price target out the other day of it was like 10 times where it is today. And
I didn't see that. I'd love to actually see that, but everything's been crushed. I almost don't own a stock that hasn't been crushed. I don't know, maybe you've got the lucky one, but there was just a huge risk off moment, so I've not sold a single share, and I'm excited, and I love that they're saving the environment and making money.
Where do you see the carbon space, the offset market heading? We've obviously got the sort of government carbon credit market, and then we've got this voluntary offset market. Do you see them converging together?
No, because one is regulated by government, and it's the government taking its piece. But what I do see is a variety of standards emerging, because soil carbon is much different than maybe carbon from the forest in terms of how you calculate it, how you think about it. I see that this market will become massive, and it will become commonplace. But remember, this is just a transition. Carbon credits aren't the answer. They're a transition to mechanical processes that have been decarbonized. They're a transition to a kind of a different future. And so what this is really about is a tax on emitting carbon, and it's designed to make carbon and the cost of polluting cost more, so that you either buy less widgets or you make widgets differently.
Okay, so let's talk about Nickel 28. You are officially involved with this company.
Yeah, no, I'm the chairman of that.
Yeah. So you guys just put out a corporate update this week. It seemed like there was kind of a rough sort of Q4, Q1 with some COVID issues.
Yeah, no, it was pretty. It sucked. So the mine has operated and operates as really one of the lowest cost, most efficient nickel producers in the world. So this mine is amazing, but sales, have just not really been in line with our historic sales. And I think that's really, it was driven a little bit by COVID, but actually this whole kind of upending of the nickel market was really problematic, because the reference price for nickel forever has been the LME, and that was completely discredited. The LME kind of acted in a way which the market didn't like. They bailed out someone who was short. And so I think what you've seen now is price discovery is different, and the market is working out price discovery. And as a result of that, bid ask can be a lot wider. And, you had a lot of factories in China shut down, and a lot of our customers and consumers were shut down. And so it just really impacted our sales.
How has it changed? Like, do we now have sort of buyers and sellers sort of coordinating amongst themselves? Are they not using the LME as much?
Well, I mean, the LME still exists, but like prior to that whole situation, every contract had an LME reference price, right? Every single one. It was a payability, or however, depending on the situation. Now I think the market doesn't trust the LME. That doesn't mean it's not a market and it isn't telling you something. I think it just means that there's a lot more negotiation, direct, and I would say the market's not there yet. Like I think we don't know. The nickel market is still not as efficient as it was pre that situation.
That's really interesting.
It will be. I mean, markets are efficient, but remember, and this is like one of my calls here that people maybe is off the run here, but if you remember the U.S., we had this big reopening trade where everything opened up and all the market went crazy. I think there's going to be like a China reopening trade. So I'm not buying Chinese listed tech stocks or whatever yet, but I have a feeling in the same way that when China reopens, there's going to be a big equities China reopening trade because a lot of our backlog and inventory is just due to the fact that our consumers that we've sold to sat inside of China and the factories were closed. And so I have a feeling that just more broadly, you're going to see like a China reopening trade at some point when that changes there.
So you think that'll spill into commodities?
Yeah, for sure. There's no question, because I think China being closed is having a big impact on commodities. And by the way, this could be problematic because you have a strong USD. They're fighting inflation. Commodities have been weakening. Well, certain commodities have been weakening because of demand. And so it's probably helping them get inflation under control in the West. But by the way, if you have this huge China reopening trade and they start consuming a huge amount of commodities, all of a sudden this could impact inflation in the West and cause a problem again. So,
yeah, that's interesting. I heard a theory yesterday that right after the midterm elections, there's going to be less of an incentive for Biden to fight inflation, and we could see inflation end up doing worse because it's not like he's battling for those midterm elections anymore. So
I think that's true. He's not, but you know what? If you're working at, my mom works at a hospital, and if you're making whatever you make working at a hospital, I don't know, man, 20% more on your grocery bill, it really matters. So I think Americans won't stand for it, and they'll want at least the perception of that he's out there trying to do something. And if he doesn't, I think the Democrats will get crushed in the presidential election. So I would be surprised if he just kind of quits thinking about it.
Yeah. Anthony, thanks so much for hopping on here and doing this. It's always great to get your insights. Most of the guys that we talk to, they're involved in small caps, aren't always, as well spoken and insightful as you are. So we really appreciate you hopping on here.
Yeah, no, thanks. I would just tell all the folks watching, be careful in these small caps because, you can jump in too early and get smoked out. So, sometimes it's better to play the large cap names first and then tiptoe in and miss that first 10% up.
Mm-hmm. Awesome. Thanks so much, Anthony.
Thanks, buddy. Appreciate it. Anytime.
Okay, everybody, thanks for watching. If you haven't already, please hit that like button, subscribe, and ring that notification bell, and let us know what you think in the comment section. All right. Thank you, everybody.